Hello and welcome to Earnings with ET Now. We are at the TCS house, and TCS has come out with numbers which are in line with street expectation. And joining me today is Kriti Varshan, who is the CEO and MD of the company, and Aarti Sri Mannian, who is the ED President and CEO of the company. Kriti, to begin with, we began the year on a very cautious note. Q2 was very cautious from that point of view for the entire sector. Looking at Q3 and Q4, have you seen an improvement in the demand environment?
Sajit, in Q2 itself, we called out that overall demand environment, we are seeing a small improvement, clients' decision-making cycles, like previously, they're quite cautious. While the caution continued in Q2, but same time, clients are more willing to spend on those projects where they could see an immediate return on investment and where they saw the value. That positivity is continuing in Q3, and I believe that would continue going into Q4, particularly if they see the return and value kind of sustain. You would see that positivity and optimism continue in Q4.
I think you've been interacting with the clients. As part of your interaction, as Kriti said, has the discretionary spend environment improved drastically in the last 3 months?
If you really see, like Kriti said, I think what we saw in Q2 is sustaining. But there are some areas where, we see increased demand, especially if you take AI, right? Compared to Q2, the number of client projects that we executed in Q3 was higher. So there are specific areas where the client demand saw an uptick in Q3.
AI, she spoke about $1.8 billion. You started giving the AI figure now.
Yeah.
How is the demand coming in? And if I'm not wrong, in the analyst meet, you said that 50 out of 60 clients have projects AI embedded in it.
We said 54 of the top 60 clients.
Yes. So how has it improved now?
It has improved. I would say one thing is almost all major customers of ours. In fact, more than 85 to 90% of the customers with whom we make at least 20 million annual revenue, we are engaged with them in helping them adopt AI. And so there is and our customers are very keen to see how they can get value out of the AI, because they want to participate in AI adoption and get the ROI from coming out of it. So it's increased, it's ever increasing. Every quarter, like Aarti said, on a Q-on-Q basis, we had close to 20% growth in our AI revenue. And we expect that acceleration and momentum to sustain.
And if I may add, I think what is also different is, it's also a lot of proactive engagement with customers on AI. So, you have those initial conversations. We are running what we call Innovate with AI sessions with our customers to help them identify those high impact ideas that they need to implement. We implement them within a quarter, you see the results, then you roll it out across the enterprise, and also you come up with newer ideas. So I think that whole approach is very proactive in terms of helping them, customers identify ideas, building it, scaling it. So that's what we are seeing, and compared to Q2, we scaled these efforts quite a bit across verticals and geographies.
Kriti, if I look at investors, foreign investors, in 2025 calendar year, they sold off IT companies worth $20 billion. And the argument was that Indian IT doesn't have an AI play. Do you think that is a wrong assessment of how Indian IT is and the shape and size of it?
So if you look at Sajid from TCS perspective, last quarter when we met, we said we have set our aspiration to be the world's largest AI-led services company. And we also said that it's based on 5 pillars on which we are going to be going towards this vision. And on one hand, on how are we delivering the services to our customers, we clearly define 5 levels of autonomy through which our customers can adopt. Then this quarter, we also unveiled our full stack AI play. Full stack AI play starting from infrastructure to intelligence. What we call infrastructure to intelligence as a full stack AI play, where we have the ability to offer solutions to our customers across all the layers of end to end. So we believe that we have, like in fact, TCS is probably very uniquely positioned to offer services to our customers across the play and more than one layer. Like it's for some other customers, we'll be building models, building agentic platforms, building agents, and helping them gather intelligence. For some other customers, we'll be building an AI data center on which we'll be helping them to do the inferencing and then do the small language model. So we have a multi-layered play here, and we are very confident that TCS will be in the forefront of helping customers leverage value from AI.
I think AI nearly $1.8 billion of your portfolio today, growing at 17.3% quarter on quarter for you. Do you think the pace of AI deals as you more interact with your clients more is going to increase further?
I definitely see that, and the way we see it, where are customers investing in AI? We need to look at it across two areas. One is getting ready for AI, which is about putting the technology foundation which is required to succeed in AI, and then the AI initiatives themselves. So across both of these areas, we are seeing client spends. So for example, you need to get your data foundation ready to do AI. So there are initiatives around cloud, data, right, enterprise systems, cyber. All those form the new services that we typically talk about that helps customers put up a strong foundation for their AI future. And then the AI initiatives that I talked about sort of sit on top of it, where customers are, compared to last year when you look at it, I think the pace of adoption and the pace of putting solutions in production has gone up significantly in 2025. And we expect to see this further accelerate.
And which is the vertical where you're seeing the maximum, demand coming in and proactively demand coming in for AI? Is it the BFSI or the consumer space?
I would say it is across verticals, and definitely BFSI, life science, healthcare, manufacturing, all these verticals. But honestly, the demand is pretty much across the board.
Kriti, one of the arguments made by the analysts is that since many companies are now chasing cost takeout orders, TCS may have some pressure with respect to margins because TCS gross margins are much better than the peers. And there is a hyper competition which is coming in getting those orders. Is there any truth to it that yes, there could be an impact on margin as you go and change, or your organizational efficiencies will take care of that kind?
So I'm sure we have spoken about this in the past also, Sajid. When we go and bid for a project, we are as competitive as anyone. Okay, and we want to give the best solution to our customers. And we try to be, we don't keep any margin threshold when we work on an individual deal. But our approach to margin has always been a portfolio-based approach. Now we have a set of projects. How do you drive efficiency? How do you bring in productivity? How do you bring in the right pyramid structure to drive margin? So at the deal level, we are as competitive as anyone. And our margin story is once we win the deal, how do we efficiently deliver the solution to our customers? That's where we differentiate ourselves. It's not only through pricing. While we want the pricing to go up and the pricing has held stable and moved up, our approach has always been on how do we bring in efficiency once we win the deal. We are very competitive when we go to market, when we chase a deal.
When you look at the revenue this quarter, 2% jump in rupee term and 0.8% constant currency quarter on quarter. How much of that does the BSNL deal has? Is there an India impact on that top line?
BSNL deal was flattish. There's no, it is all coming through outside of BSNL.
And entirely was overseas or verticals led, which is BFSI and others?
No, like about of the 80 bips constant currency growth we reported, about 30 is international, 50 is domestic. But that's a typical domestic seasonality. Like Q3 is usually when we have more India business growth.
Another thing which is just wanted to your thoughts on. You had that setback with CSCD, which is there, and you said that you will be challenging it. But you've taken a provisioning in this quarter. Why is that?
No, it's more guided by what the auditor suggested that we should do. We believe that we have a strong case. We should go to the Supreme Court. Most importantly, we believe that we have not done anything wrong. And we respect the orders of the appeal court, but we believe that there is a case for us to represent in front of the Supreme Court and get it reversed. At the same time, it's just abundant caution and following the very conservative accounting principles. We thought the overall order was for about 210 million, and it had a compensatory and punitive. So we took in what we believe is a normal punitive is what we have taken as a provision. What is probably beyond what's the normal course of punitive damage, we are not provided for, and that's where we are going to Supreme Court.
Kriti, I'm running out of time, so one or two more questions which I'll ask. One is on the US market, how it's been faring. We've seen the Fed rate cuts that should have impacted in some way with respect to discretionary spends coming in. Are you seeing the discretionary spend environment better than what you would have said maybe a quarter or two back?
See, as I said, nowadays clients are looking at based on the return on investment. They look at the projects that they have to execute. Some of them are where even it could be a cost takeout, but will the cost takeout happen very quickly? Or some of them are new investment projects. Again, they look at what is the payback period, and the decisions are taken based on the individual projects at a time. It will be wrong to say discretionary projects are back or not back. The clients have been more nuanced in their approach on, but I would say the decision making overall has been better than in the past.
You've been able to manage and hold on to that margin of 25%. There's an aspirational margin as well, which is aspirational as of now. But you've always said that in FY26, if you see the revenues, will grow over the previous year. Are you going to maintain that guidance or outlook, let me put it, for your revenues?
I would say that I want to do it, okay, because there's only one quarter left. Okay, I don't know whether I can commit to you saying that I will, okay, but it continues to be our most important aspiration. We'll drive towards.
Kriti and Aarti, thank you very much for joining us today on
Thank you, sir.
ET Now. Thank you.
Thank you.